An increasingly popular concept when considering a gold investment is holding gold in an IRA account. A gold IRA is a self-directed IRA and enjoys the same tax benefits as a regular IRA. Most self-directed IRAs are initially funded through a gold IRA rollover. You would seek out a financial professional for individually tailored investment advice. You can buy pure gold through a well-respected gold IRA company like Augusta Precious Metals, which has screened and selected a few preferred custodians for gold IRA accounts. Gold Hill Retreat has conducted an in-depth review of Augusta Precious Metals. They have been rated the top 5 best gold IRA companies to work with. Trends in the gold market. The gold market is volatile and can be unpredictable. Over the past few years, various gold funds have offered different liquidity and diversification levels. Gold mutual funds are actively managed and may charge high expense ratios. However, physical gold is not bought, just paper that is theoretically backed by debt or equity of mining companies or futures and options contracts for physical bullion. How to store your gold investment. When you buy physical gold to hold in your individual retirement account, IRA, you must have it stored in an IRS-approved depository. Gold is seen as a hedge against inflation and a store of value through thick and thin. However, holding gold comes with unique costs and risks, but historically, it has also offered unique benefits. Purchase gold to protect retirement wealth from inflation. When retirees look for ways to protect their retirement account savings from inflation, a gold IRA company like Augusta Precious Metals can be a valuable resource. Gold's inherent resistance to raising inflation rates makes a gold IRA investment strategy a great way to protect your retirement income. Augusta Precious Metals can help protect retirees from inflation by buying and holding gold bars and other precious metals in a gold IRA. Gold IRA rollovers are commonly termed gold IRA rollovers. A gold IRA rollover is when you transfer the assets from your current retirement account into a new gold IRA. Your financial advisor can help you decide which option is best for you, and Augusta will work with you to make the process as easy as possible. What are the reasons to invest in gold? The word gold has been used for thousands of years as a symbol of wealth and prosperity. In addition to its aesthetic value, several industries rely on gold, including jewelry, dentistry, and as a measurement of temperature. Gold has been valued for centuries because of its many qualities. It is unique in our society as it is both rare and valuable. In addition, gold is an intrinsic asset. It cannot be created out of thin air as paper money can. If disaster strikes, such that the paper money and the system that supports it no longer exists, we will revert to gold as a form of currency. The high possibility that the world might revert to gold is because gold is scarce and recognizable worldwide. Gold is one of the most essential metals on Earth for various reasons. Gold acts as a good conductor, allowing light to be absorbed, making it an ideal material for dental work like fillings, crowns, bridges, and orthodontics. Gold also doesn't corrode and is non-toxic, making it a valuable resource for the future as NASA uses it more in aerospace vehicles. The importance of gold as a multi-use metal cannot be overstated. Gold is a valuable asset. Gold is a valuable asset that offers diversification and liquidity. Gold is not correlated with other asset classes, allowing investors to use it as a hedge against stock market volatility. Gold is also liquid, which can be relatively easily bought and sold. Over time, gold has consistently outperformed other asset classes. From 2000 to 2020, gold returned an average of 10% per year. In comparison, the S&P 500 returned an average of 6.8% per year over the same period. Low initial investments allow investors to start investing in gold with as little as $1. Gold is also a physical asset, which means you can hold it in your hand. Gold is a valuable asset that can provide appreciation in the share price. Typically, rising gold prices are seen in the value of gold stocks, which allows investors to make a profit. Physical gold investing is an excellent way to diversify your retirement portfolio. Gold is a good way to protect your retirement savings from inflation. Gold is also a good way to add a diversifying component to your retirement portfolio, regardless of whether you are worried about inflation, a declining US dollar, or even protecting your wealth. The gold price tends not to move in tandem with stock and bond prices. Gold bars are a good way to hedge against economic uncertainty. Gold is a good way to hedge against economic uncertainty because it is a physical asset that is not subject to the same forces as stocks, bonds, and other financial assets. Gold is also a good way to protect your wealth during times of turmoil because it is a valuable commodity that can be traded for cash or other assets. How to invest in gold. Investing in gold is a way to protect your money from inflation, a decrease in the currency's value, and other economic disasters. There are several ways to invest in gold, including buying coins, gold bullion bars, and investing in companies heavily reliant on gold stocks, mutual funds, or ETFs. Many people are opening accounts with well-known gold IRA companies to purchase physical gold and silver to hold in their retirement accounts. Gold coins and bars are popular for investors because they're easy to trade and transport. However, gold bars not as easy to divide into smaller pieces, so they may not be ideal if you're looking to invest small amounts of money. Gold ETFs are a good choice for investors who want to invest in gold without worrying about storing or transporting it. Mining companies are a good choice for investors who want exposure to the gold market but don't want the hassle of buying and storing gold themselves. 3 most popular ways to buy gold. There are 3 main ways to buy gold: physical gold, gold-based company stocks, and mutual funds. Physical gold can be bought as bars, coins, or jewelry. Gold stocks are shares of companies that mine for gold or are heavily reliant on gold. These stocks can be bought and sold on stock exchanges. Mutual funds that invest in gold can also be purchased. These funds hold a basket of gold-related investments, such as gold stocks and bonds. Purchasing stocks, bonds, or ETFs requires a brokerage account, and many offer advisory or brokerage services to assist in selecting the right gold companies to fit your needs. Investing in gold stocks, considering a gold mining company. You can invest in individual stocks or exchange-traded funds, ETFs. A gold mining company's stock depends on the company's ability to produce returns, not necessarily on the current gold price, and gold mining stocks may deliver dividends. A bonus to investing in the gold mining sector is that if the mining companies are correctly run, their stock prices could rise even with declining gold prices. Purchasing gold ETFs and gold mutual funds investing. Gold exchange-traded funds, ETFs, and gold mutual funds provide investors with exposure to gold without taking on the costs of physical ownership. These products come with fees, but they are often much lower when compared to the management of other assets. Gold ETFs focus on owning physical gold or shares of gold mining companies, creating different risk profiles. For example, SPDR Gold Shares, GLD, is an ETF that holds physical gold, while Van Eck Vector's Gold Miners ETF, GDX, owns shares of gold mining companies and allows investors to add positions in a gold mining company. Gold stock ETFs and mutual funds typically own shares of several gold miners. For example, the iShares Gold Trust, IAU, shares of Barrick Gold, Newmont Mining, and Anglo Gold Ashanti. The SPDR Gold Mini Shares Trust, GLDM, owns Goldcorp, Kirkland Lake Gold, and Newcrest Mining shares. Gold mining ETFs and mutual funds can offer investors broad exposure to the gold mining segment, which helps reduce risk. However, the downside is that they underperform the price of gold. For example, the Van Eck Vector's Gold Miners ETF, GDX, has a 5-year annualized return of -5.73%, while the SPDR Gold Shares, GLD, has a 5-year annualized return of 8.54%. Owning physical gold. Gold dealers typically charge markups when they buy or sell gold, making gold investing challenging for investors more accustomed to trading stocks and bonds online. Investors can choose from various gold assets, including gold bars and bullion coins. The United States mints coins like the American Buffalo, American Eagle, and National Purple Heart Hall of Honor coins. Many other countries have mints producing gold coins and bars, including Canada, Australia, Austria, and China. Gold bullion bars come in various sizes, including 1/10 of an ounce, 1/4 of an ounce, and half a pound. Investing in gold coins. Gold coins are one of the most common ways to invest in gold, and they are a great way to start investing in gold because they can be purchased in smaller increments and are several widely circulated coins. When selling gold, gold coins are easier to find buyers who will pay the price of gold. Many investors prefer the smaller increments of gold coins because they are considered low-risk investments. Depending on your investment objectives and personal finance will determine how much gold you will add to your portfolio. Investing in gold bullion. When investing in gold bullion, there are a few things potential investors should keep in mind. Firstly, gold bullion comes in bars that range from a few grams to 400 ounces. If you are looking to hold gold, bullion may be the best method. Secondly, it is essential to use a reputable dealer. Choosing a respectable dealer will ensure that you are getting a quality product. Thirdly, Paying for delivery or storage with insurance is essential, protecting your investment in case of loss or damage. Finally, it is necessary to stay current on the price of gold, so you can pick the right time to buy it. Why gold is so important? Gold is considered to be a valuable commodity for several reasons. Those reasons include that it's been used as money for centuries, is rare, several business sectors use it, and it is naturally occurring. Global gold production is limited to the mining sector and how much they can get from the earth. In the modern era, this precious metal has been a popular investment choice to diversify an investment portfolio and hedge retirement savings against currency fluctuations. Check out the best gold IRA companies offering a way for everyday investors to take advantage of owning gold in their retirement accounts. Gold also has a great deal of symbolic value, which makes it even more desirable. For centuries, governments have used it as money to ensure their currency, and it still holds a special place in our society. The first gold coins were minted in about 560 BC by Croesus, the king of Lydia. Today, many governments, individuals, and institutions still hold investments in this rare metal in the form of bullion bars. As technology advances, investors can purchase gold in ways they never were before as a digital token on the blockchain. Due to gold's importance, the World Gold Council has created the Retail Gold Investment Principles, RGIP. Gold is a valuable resource. Gold is a valuable resource in high demand and used in several industries. For example, it is often used in the medical field, high-end electronics, and semiconductors. It is invaluable because it doesn't corrode or tarnish, which makes it a good choice for these applications. Gold is also non-toxic, making it safe for dental use. Although it's not used nearly as much today as it once was, gold is still used for appropriate applications to protect and restore teeth. Gold can still be found in inlays, onlays, crowns, and in some cases, fillings. Purchasing physical gold in increments helps to counteract price fluctuations. This method is known as dollar cost averaging. By implementing dollar cost averaging, an investor will not have lost all of the investment if the price drops. Investors typically purchase small amounts of gold or gold stocks over time, and the types of gold investments an investor is considering will determine when or how much of an asset is required.